is Jonathan Schiessl. He's Deputy CIO, Westminster Asset Management, joins us right now from London. Jonathan, good morning to you. Thank you for taking the time out. Really appreciate your time. You know, the last few days in India, not the large cap, but the mid caps and the small caps are really getting punished. And the FI outflows continue. One concern amongst almost all participants is whether the pace and the quantum of FI selling that's happening in India, will that continue to move ahead or no? I mean, I'm just trying to understand from you, Jonathan, do you believe this is an India-specific thing, or is it EMs being sold out of as a basket because of the poor returns for the last many years?
Good morning. Yeah, I think there is an element of an India-specific thing around this, but there's also, I think, the larger point currently, and certainly over the last few weeks, has been some of the recovery in the Chinese markets. Now, I think FIIs have been net buyers of India for many years. All right, there's periods where we have some selling. But I think India had become quite an, if you like, over-owned market within an EM context of foreign investors. It was the sort of favorite market of most foreign investors, certainly for quite some time. I think the attractions are still there, but what's changed now is, all right, you can put aside all the issues of EM versus DM and all those other issues, but within the EM context itself, India clearly still and has always traditionally traded at a very big valuation premium to other markets. But what's changed about that now at the moment is you've got more momentum coming back into the Chinese-focused markets. Chinese tech, in particular, has been given a real boost by the whole release of DeepSeek and this sort of news around AI coming out of China. And that's really making the Chinese indices move higher, driven by Chinese tech stocks, which look extremely cheap vis-a-vis their American counterparts. So I think what you're seeing is a little bit of money coming out of India from FIIs carrying on. They do still retain a core positive view about India. It's just there's some momentum now elsewhere, and you're just seeing a bit of money coming out of India because of that primarily.
Mm-hmm. So, Jonathan, how long can something like this continue? Because the chasm of valuation between almost all EMs in China is very, very large, particularly so with regards to India. Plus the fact that FIs might largely like currency stability around the world, and right now there is anything but that. So while we've been reading headlines, or even we've been making headlines about how the FI underweight on India is at a 15 or a 16-year high, can that continue for the intermediate future or the near term?
Yeah, I think it can carry on, for a bit longer. It's not only China. There's a little bit of interest again coming back into South America and Brazil stuff, which, these markets have been badly beaten and historically look extremely cheap. The argument around the Indian valuation has been going on for decades. When I've been talking to investors and they say, I can't buy India because it's expensive. Unfortunately, a lot of these investors have missed out on fantastic returns, over the longer term because they've been worrying about a valuation issue. Now, India, to my mind, deserves to trade at a valuation premium, and I think it will carry on doing that. But just in the short term, because there's a bit of momentum, there's a story building around China, even, again, perhaps South America for a time. And I think just some short-term money probably will come out of India and carry on coming out of India. But I think anybody with a medium or longer-term view will be looking at these declines and, again, thinking about building up positions again. So I think it can carry on for a little bit longer, but ultimately, I think you will see investors come back in when they think it's gone too far.
So, Jonathan, what is that tipping point? And I'm just trying to understand this, because when I map the earnings estimates for India, we are now close to the long-term averages. And yes, the pendulum can swing a lot longer and a lot deeper into the undervaluation territory as well. But I'm just trying to understand, what would it take to swing? Would it be that for now, even if the valuations become cheaper, because the other stories are promising, investors stick to that, and they turn around once maybe the currency stabilizes or growth picks up or earnings pick up? What would be the tipping point?
I personally would think it's not going to be an India-specific reason. Valuation, as you rightly point out, is a very difficult measure to time markets on. As you say, valuations can trade at extremely cheap or extremely expensive valuations for some time. I think it will probably be a factor that drives money back out of the more cyclical emerging markets back into the longer term play of India. That'll probably be a catalyst. It could be trade issues. It could be further, US moves against Chinese corporates or investors finding it more difficult to buy Chinese shares. Something like that will probably be the catalyst, but I don't think, as you rightly say, it will be because it gets too cheap. I have in the past, talked to investors when India has had those brief periods of extremely cheap valuation, and you tend to find very few people who tend to bite on cheap valuation alone. So it's probably going to be some sort of external factor which will sort of, bring foreign investors back into the Indian market.
Got it. And of course, that can't be known as of now. It's a bit of an unknown entity. One last question, Jonathan. If the currency were to stabilize, is that a big positive, or really in the current scheme of things, you don't think the currency matters as much as the other stories?
I think the currency, had been remarkably stable for some time. I think foreign investors, traditionally have been used to a declining rupee, but I think the currency is important, but I think it's not going to be the primary factor that will cause investors to consider India. And obviously, the bigger picture at play is the dollar and what's going on in the US that has the overall influence about where the direction of the dollar. So, obviously, Trump has in the past indicated he'd rather see some sort of weakening of the US dollar. And that would obviously have implications if that does come about for the rupee going forward.